I'm going to tell you what no one wants you to know about the New York City real estate market right now. The third quarter results were just published with very little fanfare. Stay with me for the inside story. I am Julia Boland, a licensed associate real estate broker at the Corcoran Group, and I have been helping buyers, sellers, and investors succeed in New York City real estate for over 2 decades. What no one wants to talk about right now is that transaction volume has weakened considerably, and transaction volume is down 18% compared to last year. In this video, I'm going to review the results of the third quarter report with you, and I'm going to offer 5 tips for sellers and 5 tips for buyers to harness the current trends. I am proud to be a part of the Corcoran Group, which gives me access to world-class research. This information enables me to elevate the level of service I give my clients. First headline is pricing. Pricing is down approximately 3 to 4% based on the closings from last quarter. According to the research department, pricing in Manhattan is only just beginning to adjust to the higher mortgage rates and the slower demand. Sellers who are serious are negotiating when they get an offer, but you shouldn't expect prices to come down quickly. New York City real estate is a slow-moving market when it comes to price shifts. We measure demand by signed contracts, and last quarter those slipped 15% compared to last year. This is the 6th consecutive quarter the contract signed has declined, showing a very slow, steady decline in demand. Let's put that number into context. During the third quarter, approximately 188 contracts were signed each week. And in the incredibly vibrant market of 2021, we saw about 300 signed contracts. Now, that was record historic volumes. But on average, in a good, steady market, I'll see about 200 to 250 signed. So averaging at 188 shows that demand is on the low side. Now, as I'm sharing these signed contract numbers, bear in mind that this is just the overall for Manhattan. And if you need to get more granular per neighborhood, I'm more than happy to do that with you. For example, most neighborhoods saw a 15% decline in signed contracts. Apart from Upper Manhattan, which is not getting the attention it deserves right now, and those contracts are down by a whopping 32%. Moving to the supply side of the equation, we note that the inventory levels are down by 3%, and they're hovering around 6,500 homes on the market for sale right now. And that is low, but not the same lack of inventory that the rest of the national housing market is experiencing. Across the city, we are seeing that would-be sellers are locked in by having very low mortgage rates. If you have a low mortgage rate and you want to sell and you start looking around, you will see that the cost, even of downsizing, can potentially be more expensive than staying where you are. And this is likely to impact inventory levels in Manhattan for the coming year or so, unless there's dramatic change in mortgage rates. One interesting inventory stat to note is that this summer, fewer than 3,800 new apartments were listed. That is the lowest number we have seen since the financial crisis of 2009. Well, I just shared a lot of numbers with you that just didn't sound that encouraging. So let's take a look at where the opportunity is for sellers and buyers. If you are a seller and you own a studio or a 1-bedroom, this is a great time to be on the market. Inventory in that particular category is down 11 and 12%. If you are selling a smaller apartment, you want to make sure that it's in great condition. The person buying it is probably going to be very cautious with their cash, and they are not going to want to take on a project. Now, if you do have some repairs to do, ask me about a special program that the Corcoran Group offers where you can get the work done for light renovations and not have to repay anything until you get to the closing table. If you own a condominium, you can do what's called a purchase SEMA and transfer a portion of your mortgage to the buyer's bank. And what that will do is save them money on closing costs so that they can either buy down a point or put it toward closing costs and make the apartment you are offering more affordable. Pricing is more critical today than it has ever been. Price it too high, no one will come to see it. Price it too low, I can't guarantee you'll have a bidding war. So how you price it requires a great deal of thought and effort. Who you hire to sell your apartment in this market matters more than it ever has. Good news for you as a seller is transaction volumes are down. So your favorite go-to real estate professional might not be as busy as they've been in the past and have more time to devote to you. Now, if you are a buyer, where are the opportunities for you? Well, the obvious is pricing. So let's not push that aside. Pricing is important. But equally important is the fact that mortgage brokers and bankers need to make money. And so they are getting creative. And I am seeing deals come across my desk where they may have gotten cash back that helped them with a closing cost that really made a lot of long-term economic sense. Or I've even seen rates as low as 6%, which is a little bit stunning given the fact that if you look at the headlines, mortgage rates can be close to 8%. So who you work with as a mortgage professional also is incredibly important right now. Now, coming into the fourth quarter, demand is typically low, and a lot of buyers just sort of put their search on pause. And so that, coupled with the fact that demand is low overall, will really help you if you're a buyer out there, because you won't have as much competition. And why would you buy with mortgage rates so high? Well, because the average rent is $4,495, and the rent even for a studio just surpassed $3,500 in August. You may recall just a short while ago, I was talking about the fact that transaction volume is down in the financial district in northern Manhattan. So if those are neighborhoods you're considering living in, considering purchasing in, this is the time to do it. Those sellers are likely to be more negotiable. Additionally, in northern Manhattan, there's still plenty of properties that have tax abatements that are active for many years to come, enabling you to save a great deal of money, not only on your purchase price, but on your monthly outlay. So your key takeaways from this video should be that transaction volume is down 18%, meaning demand is low. Prices are not down 18%. Prices are down about 3 to 4%, and we don't see that changing anytime soon. There'll probably be a slow, steady erosion unless something changes in the future. What else did we cover? Inventory. Inventory is interesting because we do have inventory. A lot of it has been just lingering a little bit, but that could change going into 2024. Thank you so much for watching my video. I hope you enjoyed it and took away some interesting points. If it raised some questions with you, please feel free to reach out to me. You can email me, call me, DM me, whatever works for you. I am Julia Boland, principal of the Boland Team at the Corcoran Group in New York City. Please don't forget to subscribe to my YouTube channel so you never miss a video where I bring transparency to a complicated market.